Hey guys, I welcome you all to DevTech Finance, and in this video I would be talking about how to pick up the best stock. So many of you might face this problem of deciding in which stock do you want to invest in. So looking at the volatility in the market, looking at the fluctuations in the market scenario, we just can't be certain about getting the price back from investing in any stock, how much return we would be getting, and whether our investment option is correct or not, whether we should go for this stock or not. All these questions come to our mind. So I would be just trying to give you some suggestions on the basis of certain criterias which you could use to evaluate your stock investment, in which stock you should consider to be investing upon to get the best out of it, to minimize your risk and maximize your returns. So let's get started with this video. So starting with the industry growth, before you decided upon any company to be invested upon, you need to know about the industry in which that company falls. Okay, so for example, let's say looking at the HDFC Bank. So that bank comes under banking industry. In that industry, what are the competitors over there? So who all are the competitors of HDFC Bank? Other than that, whether the industry is doing good in recent years or not, what is the industry growth parameters? So likewise, there are many industries, whether we talk about automobiles, airlines, pharmaceuticals, hospitality, chemicals, real estate, technology. These are just few examples. There are many industries, sector-wise allocation of different companies. So you need to know what is the industry's performance. Just understand it in this way that if an industry is doing well, certainly the probability of the company in which you are investing would be higher than that industry which is not doing well. And here we are talking about probabilities because when we are talking about stock trading markets, we are not really certain about what would be the results. But what we can do is making some probability kind of thing, like whether it would go well, it would not go well, or whatever would be happens, we can make a prediction out of it. So this is why we need to consider the industry growth. See, your company, however well is its performance, if the industry is going down, the overall sector is going down, it won't be able to achieve so much of good returns out of it. And thus you would be ending up not maximizing your profit, but going stable or maybe incurring some kind of losses because of the industry in which that company is falling. That's not giving a good performance. So how you could expect your company to go good about it? So here we are not certain about anything, but we are trying to minimize the risk which is involved when we are investing in any stock. So we need to look upon the industry parameters, whether the industry is doing well or not, what has been the growth parameters, is there something transformation coming in the industry which is likely to make the stock prices of the companies involved in that industry go certainly hike. So you need to consider all these things. And once you are decided with the industry, you ought to be decided with one of the company, with any of the company falling in that industry. And now when you have to go for that company selection, how you would go about that? So first suggestion would be to look at the company's financials. See, whenever you are going to a shop to buy any product, you need to know that how is the product quality, and whatever money you would be paying to buy it, whether that would be worth that money. So you try to make a comparison that the value you are putting and the product you are getting, is it okay or not? What is the brand value? How is that product's quality? All these things. So why not when you are investing in any company's shares? You need to know about that company, right? So that you can get an idea about what is company's performance, and on the basis of that performance, whether your stock is likely to go up or down, whether you should invest or not. So just see, these are some of the basic parameters. You have to look out for the sales, then the net profit, the operating income. These three things are the most important. Whether the company is giving positive sales record, it is growing, it is trying to expand its market. The profit earning is good or not. Is it able to minimize its expenses, maximize its sales to get profit out of it? And how is that profit going? The operating income. So the core activity of the business, whatever income it is generating from the core activity. When we talk about operating income, it becomes important because there are other incomes as well. Other incomes could be like you realized money by selling any investment, selling any asset, but that won't be consistent over the years. That's just one time activity. While when we are talking about operating income, that's the core activity of the business. So that income generation would be more reliable when we are looking about any company. That is the business activity in which it is dealing. So we need to consider these parameters, whether we talk about sales, net profit, operating income. It plays a very important role to get you an idea how the company is able to minimize its expenses and maximize its sales to get some profit out of it. And when you are making a comparison, you don't just need to evaluate on a single year basis. You need to compare it year on year so that you would get a perfect view how the company is growing or not. Whether it happens like in 2015 it was going good, in 2016 it came down, in 2017 again it went up. So you don't need such a figure. You need something more reliable. So if it is growing consistently over the years, that would be a more dependable company in which you could invest, because that company is so serious about its performance. It is making certain good growth parameters. It is consistent in its performance. Okay, so all these ideas you can get by looking at the company's financials. Then comes the return on equity, the return on capital employed, the earning per share. All these things are important because you are investing, and obviously you are investing to get some returns out of it. So whatever you have provided as capital through your shares to the company, whether the company is generating income out of it. So what is the return percentage which the company is making out of that capital which has been employed in form of investment by the company? What is your earning per share? So every share, what amount the company is earning on that share. And the very important, the debt part of the company. So whether the company is burdened with liability, whether it's overburdened, or how is that liability position of the company, whether it has taken so much of borrowings that it may go bankrupt, it may be fall in the defaulter list. So we have to avoid those companies which are going high on debt because and are not able to generate profit much, because a time will come then they would be bankrupt. They won't be able to pay out all the debts. So we need to ignore that kind of companies. Yeah, if the company is having debt but is actually performing well and is putting that liability in a better way, so that can be okay. But debt is always a parameter to be considered when you are analyzing a company, because that tells you the liability on the company, the burden, how much the company is holding. Higher the burden, higher should be the company's performance to overcome that, or else it won't be going much in future. So this is how companies financials becomes important. And don't worry, I would just show you how you could check out the company's financial. It's not so tough. It's very easy. Putting up the company name, you can get all these financials. I would show you at the last of the video. So just don't worry about it and try to understand whatever is there in all these things. The second thing which we have to consider is the movement of stock. So after we are decided with company, we have checked out all the financials of the company. We think that the company is doing very well. All the financials are positive. It's giving good returns. It is able to maximize its sales. It's minimizing its expenses. All these things are going positive with the company. Now we need to look at the movement of the stock. So what the charts of the company is telling. And when we are analyzing the movement of the stock, we are analyzing it to know about the price at which we need to purchase that stock. So once you are decided with the company, it's not just that you would go and purchase the stock of that company at whatever would be the current market price, because current market price may not be the optimum purchase price for you. And how to decide that optimum purchase price? You can just take an average price considering the 3 months or 6 months stock movements. You would get an idea what was the high, what was the low, and what should be the average price on which you need to purchase. And it's very important that whenever you are purchasing a stock, you need to buy that at the lowest possible level, because that would help you maximize your returns. And an all-time greatest investor, Mr. Warren Buffett, he also said that it's very important to buy the stock at lower level than its intrinsic value, because that would be how you would be minimizing your cost and maximizing your returns, and that would be how you would be an intelligent investor. So you need to decide upon the price. It's not just that you end up paying anything which is prevailing in the market. You need to analyze what is actually the value you should pay for that stock at that period of time. Okay, for that you can consider the 3 months and 6 months charts to get an idea about it. I will show you how you could go about that. Then you could make the time period comparison. You can look at the graph for 3 months, 6 months, 1 year, 3 year. You would get an idea about the movement of stock, how it is going, whether it is an upgoing stock, it's growing consistently, or whether the graph is downward going, or whether it is fluctuating. So there are fluctuations, so many fluctuations. It's going up and then down. And likewise, you can predict the movement of the stock, and you can get an idea how this stock ought to move and why is it moving like this. You can also try to deeply figure out why is that happening. More you would be digging up into certain criterias, you would be getting a better clear picture whether to invest or not in that company. You can also consider the 52-week high and low. This is in 1 year, what was the highest stock price and what was the lowest. And when it is at the lowest level, why is that? Is that because company is doing something bad, or is that because in news something bad came about the company, whether the company is involved in any scam or something, or is it being just undervalued? The company is doing good, but the analysts and the investors are not getting so much into the company details, and thus the prices are low. So you have to analyze all these things by getting up to the data from the charts, from the movements of the stock. And you can look at the chart which would be basic, advanced and technical to give you an overview about the movements of stock. Now let's see about the company's track record. After we have decided about the industry, the company's financials, and we have looked at the movement of the stock, we need to know about the company's track record, because we always need to be aware of the companies which are involved in scams and all, because that could certainly make us end up losing all our money in the market. We don't want to get involved in certain companies which are involved in certain serious issues related to the government, related to SEBI or something in terms of its rules and regulations and compliances to be followed. So we need to be make distance from those kind of companies. And how we can go about that? We need to have a track on the news, what is going on about the companies. Just Google it out and search it out. You would get all the news about that particular company. So you could analyze whether the company is in news for a good thing or whether it is for something bad it has done. And that would be giving you an idea about how is that company, how is it in following the rules and regulations, what would be the chances of its compliances with the government's positions, the rules and regulations to be followed. And other than that, you can look at the dividend and the bonus being provided by the companies. So many big giants companies, which are Reliance Industries, SDFC, all these provides dividend and bonuses, which are quite profitable for the shareholders. So try to figure out what is the company's holding for its shareholders. And is it involved in providing dividend and bonuses? Because that would be adding up to the value which you would be getting out of your stock. And then it's always better to look at the announcements and highlights, because that's give you an idea about the company's position in the market and how the stock prices would be impacted. And let me tell you, news play a very vital role in impacting the stock prices. Believe it or not, you can just analyze yourself, just go through the news every day and you would be finding out how it is impacting the stock prices for a particular company. It just gives a rise to the fluctuations in the market, and thus it becomes very important to be updated to know how the company could perform in the upcoming years. And again, I am telling, it's not so certain in market which is very volatile, which is very fluctuating, but you can, with better understanding, with better analyzing in details about every factor, you can try to minimize the risk and maximize your return out of the investment, and you could be relaxed and reliable on those kind of investment. And if you feel that all these things are very hectic to do, you won't be able to go about it in a well manner. So let me show you how it's very easy. You can just get an overview, a picture, all thing is done for you. You just have to put the company's name and you'll get it. So let me show you. So have a look. I was talking about the industry when you are selecting an industry. So this is a website called equitymaster.com. Just visit this website and go to this research it column. Here you will get sector wise results. Just click on it and see. So see, here you can get an idea about how the industry is going. So it is giving you a sector-wise result, whether we talk about airlines industry, how its performance was in 2017, in 2018, and what is it percentage change year on year. It is representing, it's a negative figure. And likewise, you can look at various industries. So there is aluminium industry is going negative 49.6% in terms of profit. Then there is auto ancillaries, which is going positive with 11.9%. And then there is automobile sector, which is going negative. And thus you can get an overall picture about how the industry is going. See, look at the banking sector. It's not available, but the profit is 14.8%, which is also a positive figure. And thus you can find out these are the particular companies in this sector and how the companies are performing, how the overall its industry is performing. And thus you can make a comparison between the industries and you can decide upon. Okay, so it's one way to figure out which industry you want to invest in. Other than that, once you are decided with any of the industry, so let's take an example of Reliance Industries. If you have decided to invest in it, this is a website called screener.in. It will provide you about all the company's financials. So it's very helpful. I do recommend to go on this website and check out if it is okay for you to make an investment decision or not. Just see how it is providing you the information. So in starting, it would be giving a brief gist about the company, what the company is and what it is doing, what are its product. After that, you can just scroll down and have a look. It is telling you the market capitalization of the company. It's 8,82,884 crore. Then it's showing you the book value, the return on capital employed. So if you remember in company's financial, I was talking about the return which the company is giving out of the capital which it has employed. So here it is 11.37%, which is a positive number. Now, when you have to compare all these ratios, whether we talk about ROE, ROCE, P ratio, so you need to know the industrial parameter as well as the competitors or year wise year, how it is impacting. Then you would get a better idea. So if the ROCE for Reliance Industries in last year was 9% and now it is 11.37%. So it's quite good because it has increased and it is a positive number, which is indicating that the company is doing good. It is being able to generate more returns as compared to previous years. Or you can compare in between the companies and you can get an idea. And look, here is the current price. So it is 1393. But what I said, is it really the purchase price on which you need to buy the stock? Because the current price is always not the price in which you need to purchase. You need to figure out what is the average price in the time duration of 3 to 6 months, because that would be the purchase price which you could go about. So that you don't end up losing up your margins. You always want to buy at the minimum so that you can add up your margins rather than losing up your margins. And here you can have an idea the 52 weeks high and low. So 50 in 1 year of time, the high was 1412.40 and the lowest stock price was 906.60. So you can see the current price is somewhere nearer to 52 weeks high. So do you think it is reliable to purchase at this price? Well, you can make an analysis by going through the graphs. Here it is also showing you the sales growth figure, which is 1.42%, the return on equity, which is 13.01%, the PE, which is 22.30, and the dividend yield, which is 0.43%. So see, you don't have to do anything. You are having all the figures. You just need to understand these figures and you can get an idea whether the company is doing good or not. And if you are still not sure how to analyze these figures, you can pick up any other company and you can try to make a comparison in the same industry and you will get an idea which one is better. Okay, here you can also have a look at the graph. So how the graph is moving in 1 year of time. You can see it's a growing graph. If you want to consider for 3 years, you can just check out over here. So in 3 years from 499.8, it has rised to 1372.78. So this is how the growth has been in these 3 years of time. So you can see how well the company is growing. You can check out the 6 months graph or the 3 months to get a more reliable figure and to decide on the average purchasing price. What should be? So it should be somewhere between 1300, if I say. What do you think? It should be between the highest and the lowest picks. So somewhere between 1300 or 1320 would be reliable to purchase this stock. And here it also presents you with pros and cons about advantages and disadvantages of the company. So in pros, we can see it is expected to give good quarter results. In cons, we can see the company has delivered a poor growth of minus 0.27% over past 5 years. Company has a low return on equity. Company might be capitalizing the interest cost, but you can see at the in the detail going at the financials of the company whether it's doing good or not. And still, if you feel it's doing very better, just rely on that and go invest in that stock, making your purchase price being decided at a certain level so that you can invest for a certain period of time and you can hold on. Here it would also be showing you with different competitors. So for Reliance Industries, IOCL, BPCL, HPCL, all these industries, how are they doing? What is their current price? What is their PE, market capitalization, dividend yield, all these things. And you can make a comparison how the competitors are doing. So you can just have a look that Reliance Industries is on the highest level with highest current market price, with highest capitalization and the highest P ratio. Thus, you can get an idea that this company is good to invest upon, and you are already aware about the performance of the company. You can see the sales figure. So you can just looking out here, you can analyze that it has been growing since 2016 to 2018. It has grown. The operating profit has grown. The net profit has also increased. And thus you can get an idea that company is doing well with its overall efficiency. Here you can see the compounded profit growth over 10 years, 5 years, 3 years, the return on equity, the compounded sales growth, and all these figures. When we are talking about liabilities, so you can just have a look at the liabilities. It is also being increased for this industry, Reliance Industries. But the thing is whether the liabilities are being invested upon or not. So it is such a reliable, it has been expanding its business in so many areas that it is able to generate sales, able to provide good profits. And we have just now seen the graph how it was growing over time and has provided a good returns. So liabilities, it has taken, it has borrowed money, but it is utilizing it in a better way to provide to the investors. You can have a look at the cash flows over here and the ratios, ROCE, debtor days, inventory turnover, all these things. And more if you want to look at the announcement, as I say, you need to know about the announcements and highlights, whatever is going in the news. You can just check over here recent announcement on April 24, 23, and you can get an idea about this industry. And credit ratings, here you can also see what ratings has been provided to the company by ICRA, by CRISIL, so that you can understand if the ratings are good, it's more reliable for you to invest upon, and you can expect a better return out of it. So this is how you could analyze everything in a better way just through visiting 2 or 3 sites, which is Equity Master, Screener.in. Just visit those sites and try to analyze the company's performance before investing. And it's very important that you need to know the details of the companies, the stocks movement, so that you can increase the margins expectations from that company's stock, and thus you would be able to pick up the best stock. So I think this video was useful and you got what I was trying to say, and how you could go about investing in any stock, how you could choose, how you could pick up any stock which would be reliable enough so that your money would be safe and you could expect a better return and minimize your risk. So thank you for watching. I hope you like this video. Do like and share my videos, and don't forget to subscribe to my channel DevTech Finance. Thank you all.